Today, folks, you guys are like the holy grail of entertainment when it comes to the comment section. Over time, my opinions, my feelings, everything that I do within my stock portfolio changes. Obviously, I don't know how to say it, guys. Things happen here and there. And today I just kind of want to address some of this based off purely your comments. I wouldn't take any investment advice from a YouTuber by any metric, but God, it's fun for drama. It's fun for entertainment. So we're going to start with some of the most harshest critics I have. I'm going to answer their questions and opinions, perhaps just about me selling things that I love, like Google, like Facebook. I mean, I could be in and out of stocks like ETFs. I've been out of VOO, VYM. I trade these things like they're playing cards almost, and sometimes I get like OCD about it, and sometimes I'm back into them. I've been in and out of the S&P 500 index like several times over the last 6 months. But anyways, this is just going to be fun. This is going to be real fun for an Easter Sunday here, folks. I've had some good dinner, good time with friends and family, and I'm like, man, I've been getting a lot of views on my videos. Let's see what people be saying. And God, you guys got a lot to say. So let's get into this with first and foremost a comment from Dr. Dre, 1992. So somebody born in the same year that I was born in. Just a couple of weeks ago, you were talking about finally taking a step back from buying new stocks and sitting on your hands for a while. Clearly, that mindset didn't last very long. You're constantly jumping in and out of companies, hoping to make quick gains and then exiting when your plans don't immediately go as expected. You just bought Alibaba a couple of weeks ago and are already trimming your position in half. You added Google less than 1 year ago and already exited. You claim to be focusing on trying to reach 1,000 a month in dividends, but I also noticed that you quietly jumped out of VYM, which would have been extremely helpful in getting you to reach and surpass that goal long term, even though you only bought it a couple of months ago. You're also wrong about DGRO. They haven't doubled the dividend in 5 years. It only grew 65% since 2014, which really isn't that incredible for a dividend growth ETF. If you wanted the best performance, you would be buying SCHD, which has killed DGRO and VYM over the last decade. Is this really your ride or die portfolio? Question mark. I think it's extremely likely you will change your mind once again and sell it, at least one of your positions in the next year. You just can't seem to sit still and be content with the amazing companies you have. Your portfolio is perfectly fine as is. So just leave it alone and do nothing for once. Your channel is great, but don't become a stock whore like Meet Kevin, who constantly changes his mind and can't stick to the long term. Now, I love this comment. Oh my God, this guy I could tell really takes some sweet time and care into my videos. And I guess I can address this in a few different sections because he touches on a lot here. Now, when it comes to trading in and out of, I guess we could start with Alibaba for an example here. I get really overexcited about companies sometimes, and I feel like sometimes I may over leverage into them. And when the trade doesn't start going my way, I immediately will take an exit out of that. I took profit on Alibaba, and now my other half of position is in the red. I mean, I feel like this is something that I don't know is a good or a bad thing that I do. It has worked into my favor historically over my investing career. And when I'm buying into new positions, usually I don't just buy a huge amount all at once. Like usually I'll start within a certain amount, then I'll buy more of it. The more zealous I get about it, maybe I buy more. If my opinion changes in a week, 2 weeks, 3 weeks, I could exit the whole position. I did that with Momentous. I mean, I did that with MindMed. Like I'm constantly in and out certain aspects of my portfolio that I'm typically most fixated on. But I think it's a little over exaggerated that I'm pulling Meet Kevin's here because I mean, at least 80% of my portfolio I never really touch. Sometimes I might trim the positions down, but I've been in Apple since the beginning. Northland Power I've been in since the day one of my investing career. I mean, there's a whole list of companies. My banks, I've never really trimmed my banks all that much. I don't think I trade as much as these videos might make it seem, even though they're big dollar amounts. I mean, 10, 20, 30,000 in and out of these certain companies. In the perspective of a almost $400,000 portfolio, I mean, we're talking about chump change here, right? Like, I mean, and it is kind of OCD like I said, I don't know why I do these things sometimes. So you might have to bear with it from that aspect. Now, from the ETF side of it, I do like ETFs, but for some reason, when I hold on to them, I always find them as just Parker places for me to find my way of getting excitement about certain other companies. Like when we're talking about VYM, for example, VYM, when I looked at those top holdings, I'm like, if I just bought these individually and they had even half or like 3/4 of this or what 2/3 of the same performance from dividend growth and stock performance that they've had over the last 10 years, I'm going to way outperform the VYM. I mean, and it doesn't take all of them to do well. It really only takes 3 or 4 out of maybe 5 of those picks to do generally exceptionally well. And that's generally what I do, right? Like Johnson & Johnson, Pepsi, my 2 largest weighted positions, I'd say out of VYM. And I really liked Home Depot, McDonald's, all these positions I want to add, but I don't make big bank every week here. So sometimes I might trim some positions here, trim some positions there, and I'll use that money to buy some of these dividend stocks, right? I've become very proponented toward the Canadian dividend stocks. I don't know, guys. Like I said, when I think about it, sometimes I feel like OCD about it, where I'm like, do I want this? Do I not want that? And I want to trade in and out of these things. It's the joys of my portfolio. If it's what I want to do, it's what I'm going to do. I'm sorry if I change my mind on some of these positions, but I want to address everything in there. So he did say DGRO is one that I really like. They haven't exactly doubled the dividend in 5 years, but it has been like absurd growth. Maybe I was over exaggerating because I was too busy looking at things like Home Depot. Home Depot is like astronomical when it comes to that dividend growth. But I wrote the numbers down. I think in 2016, the first payment was what, 15 cents, almost 16 cents. And then in 2022, the first payment was 26 cents. So, I mean, it's a huge increase. It's not doubling by any metric, right? But I really like DGRO. I think it's an intriguing ETF from a few metrics because it really replicates my portfolio. I think that's why I'm so intrigued by it. Because when I look at DGRO, the top holdings are Pepsi or Johnson & Johnson, Apple, Microsoft, just these really core fundamental dividend stocks. At what PE do you think Shopify is harmed by? Oh my God, we're already getting into the Q&As here. So I'm going to talk about these in a second, all right? Because many people are grilling me because I just sold Google and Facebook. Now, I sold Facebook because I don't want to pay tax. I'm just like, damn, I could keep Facebook or I could buy it back in a month and not have to pay any tax on anything that I've made over the last year, which has been a lot of capital gains, unfortunately. I'll get to your Shopify question because I do love Shopify and it's kind of constantly roundabouting in my head here, but I want to talk about the indexes as well in a second. I want to get through these comments and questions here first. So let me just make sure I finished up on everything that he said here because these are just general points. Like I said, my ride or die portfolio is going to change historically over time. In that video, I did show kind of like historically how things change pretty rapidly over a 20-year period when you're talking about these top weightings. I still love Google. I still love Facebook. Don't get me wrong. Eventually they'll probably come back into my portfolio. I don't know why people they get in a big deal like when you're so into these companies and then you just decide to trade them at some point. I've been in Facebook for years and years. And it's still a huge proponent of my family's portfolio. It's not like I'm just no exposure at any metric, but anyways, I feel like I'm OCD when I'm reading these. So let's read another one. My goodness, what a disaster. Dude, just buy an index fund and call it a day. This is coming from Goldberg. You are just trading and constantly doing trades almost daily. You should rename your channel to Active Trader. To some degree, but I'm not like a day trader. I don't know if I would say that I am an active trader, guys. I sit here every day and I look at my portfolio. I don't trade every day by any metric, but yeah, I guess you could say I'm a trader to some extent for sure. I mean, I have a percentage of my portfolio where I'm in and out, shifting around certain companies now and again, but it's always worked to my favor. That's why I'm like, I've always said this, guys, and I've been 100% transparent from day one here. I've outperformed Meet Kevin, ARK Innovation ETFs. I've outperformed the likes of the S&P 500. I can't find one index fund that has matched my performance. And look, I don't know if that's going to continue moving forward, but I have constantly done this since day one in my portfolio. I've always found specific companies, usually when they've changed or something in my opinion changes or whatever the hell happens, I might sell them for some profit and put them into some other companies. And it's always just seemed to work out in my favor. Doesn't mean it's always going to, but for now it has. And for as long as like my OCD works that way and it keeps working out that way, like why would I change? I mean, yeah, I'm not going to be like this, sit on my hands and just buy ETFs like Graham Stephan. I don't have a multi-million-dollar real estate portfolio and it's too boring for me. I like buying individual companies. Yes, I think indexes should be a proponent of everybody's portfolio. But for me personally, I don't know. I'll probably end up buying back into indexes again at some point. Do you think being on YouTube and having to put out content every day pushes you to trade more than you would otherwise? Absolutely, it does. Because my mom says this a lot too, because I'll come down and I'll talk about my trades and what I'm doing. And her portfolio is done very well just sitting in specific companies. But I don't know. I just, it's good for entertainment value for you guys. And like I said, I'm OCD. I can, like with Tesla, for example, Tesla for me is that angel and devil every day. Like I find it's easier to look at Facebook and Google and be like, I could sell these and buy them back later because I just have a hard time believing they're going to double on the next earnings. So it's like I could take some capital losses, write it off against the corporate earnings period that I have coming coming up at the end of May. And it's not a big deal. It doesn't really phase me because even if it went up 50%, is it really going to make or break my portfolio? No, because it's not that big of a position. We're talking about 3-4% of a position since it crashed, right? Like it's not an end all be all here. But yeah, it's hard to sit on your hands. And I feel like Meet Kevin has this as a severity problem because I think it's kind of being right. It's like a complex because Meet Kevin's always trying to prove why he's right about the decisions he's making. But then you look at the markets in the last closing period where so many of these tech companies that were supposed to have rebounded are hitting new 52-week lows again. So it's just like we don't know if we bottomed, we don't know if we're coming out of this, but like I feel like it's a weird complex that even I have. Like when I look at the performance of my portfolio, I'm like, if I was finally losing a severe amount of money and underperforming the market consistently, could I stomach that and actually front you guys and be like, I'm not doing appropriately to my portfolio here. So I don't know. Yeah, I really feel like YouTube is a severe problem for some people when it comes to looking at the markets every day. And I mean, look at Jim Cramer's a great example, right? Because you want to talk about something all the time. And I mean, go look at what happened with Will Smith and his wife. That's what happens when you're constantly putting shit out every day. It's not all going to be great. What Jim Cramer says every day isn't always right. Actually, it's probably more wrong than it is right. But the thing is at least I'm showing you what I'm doing with my money, right? Like this is just in the full transparency of what I just like doing. So, I mean, if I'm not like Everything Money, I'm not like Graham Stevin, I'm not like Meet Kevin, I'm just doing my own thing that has taken me several years to evolve into, right? And it works for me for now, but we'll see. What's your thoughts on Well Health? Well Health is pretty good. Don't worry. I'm going to get to those Q&As in just a little sec here. And then we're going to talk about the Canadian stocks. A lot of you guys are asking questions that I do want to file in on. I just want to read a few more of these because I mentioned this briefly that Chess Dad comments on. Some of you guys are great, by the way. I mean, some of you guys have great comments. Like Vince Gill always comments in here, says, I don't think Kyle is getting in and out of trades. I see him holding core positions and making small adjustments and rebalancing. I hope to build a meaningful stream of dividends. Yeah, I mean, at the end of the day, like, I feel like that dividend side of me is always like a core-hearted part of my initiative here. So I love Vince because at least he's not so hypercritical of my OCD. But yeah, dividends, man. I feel like every great company can do two things: dividends and growth. That's why I can't sell Apple, Microsoft. They're just the greatest companies of all time. Google, Facebook, inevitably, I'm going to have to sell them unless you're going to write against them, right? But Chess Dad says the top 10 companies bar chart was a fun to look at. In the last video, check it out. I showed the companies over the last 20 years on the S&P 500. He said, look at the top companies in 2002, lol, GE, lol, I remember those days, and IBM too. Pfizer was number 5. Of the 10, maybe 4 would have been good picks to hold for the next 20 years. I guess this shows the benefit of holding an index. As GE and IBM sank, your dollars would have gone into Apple, Google, and Amazon. Yeah, so I mean, this is the problem with active trading, right? Like if you're not looking at your portfolio every single day of the week, like I do, and I constantly trade in and out of things, if you don't have that constant opinion shift when things are going out of favor, you could get wrecked. I mean, you could absolutely get destroyed, and people have, right? Whereas for me, it's just like I still believe in a lot of these healthcare stocks and things like MindMed, but like I understood that they were extremely valued, right? And I just kind of feel the same about a lot of the indexes right now, like the QQQ ETF or Nvidia or Shopify or even Google here, right? Like I love holding them, but I'm like, if I'm going to hold a stock that's going to lose me money, it damn well better pay me a dividend. And I just don't like, I love the idea of Google as a long-term position for the portfolio. I just can't, like I said, guys, I don't know. It's just OCD. And I looked at it and I'm like, if I could sell this one and buy something else instead that'll pay me a dividend, buy this one back in sometime in the near term, even if it goes higher, who cares? If it goes lower, then, great. Then I have an opportunity, which by the way, everything that I've sold over the last 2 weeks, because I don't do this all in a single day. This isn't like I just get up and I'm like, I'm going to sell Facebook and Google and Tesla down and I'm going to get rid of Alibaba today. It's just like, it doesn't really happen that way. It's very progressive. So I sold Alibaba in the mid 105 range. At Google, Facebook, I've all sold those higher than where they currently sit today. So, it's not like it's not working to my favor right now. It's just a matter of, I hope people understand that this, when I show you these end results of where I sit at the end of the week, it's not like it just happened all in one day either. So anyways, what are your thoughts on adding some of the Canadian banks now? They have been really taking a beating. Okay, so look, Canadian banks to me are just a buy every day of the week. I've always bought the banks, always, since the early days of my investing career. My yield on cost on those things are insane. And I held them when I wasn't even making money in them, because I remember there was a time period where those banks were severely underperforming the market and they were just flatlining for a long time and then they tanked. And I was like, you know what? I sold Apple and I bought the banks. And everyone's like, why would you do that? They haven't done shit for years. And then all of a sudden they're at all-time highs. You don't know what the market's going to do. This is the whole point of diversity here, folks. Whole point of diversity. If you're looking for cash flow and income, 100% buy the banks. If the banks go bankrupt, trust me, you don't give a crap about any stock you hold at that point. They will not matter. And another funny thing too that I've been hearing a lot, if I can clear up some of this like weird shit that I hear from Meet Kevin and a lot of other investors like Everything Money. Oh, dividends are tax inefficient. So look, this is something I've been hearing a lot. Two things I've heard a lot is if you're young, you don't really need an emergency fund, and if in dividends are tax inefficient, so you shouldn't really be holding dividend stocks because they're just inefficient. And you're always going to pay tax, and the company pays tax already, and then you're double taxed and all this shit. It's like, okay, two things on that. If you're retired and you own a multi-million-dollar portfolio, 100% dividends might be tax inefficient for you because you don't need all that money. If you're broke and you have no income and you haven't maxed out your retirement accounts that are typically 100% tax free, then no, dividends aren't tax inefficient for you. They're very tax efficient. And if you bought dividend stocks like Apple, like the banks, like these resilient companies like Home Depot and Amazon, you'd be doing very well right now over the last 5 years, even the last few years, right? So I really hate when it's hard to take opinions from everybody because you have to kind of understand your own circumstance. And it's the same thing with like when I hate when people just say they don't have an emergency fund and they advocate to people, oh, you can use stocks as an emergency fund. It defeats the whole purpose of an emergency fund. They're like, oh, well, you could be holding that for a year. It's like, yeah, but you could also be holding that emergency fund for a month. And who knows, maybe you get ill. Maybe you lose your job. Maybe a pandemic hits and you lose everything like I did. And then you really realize that, oh shit, if my emergency fund was invested and I had to pull it out at a loss, that wouldn't be a good thing. Like an emergency fund is on the assumption that tomorrow something really bad could happen and I don't want to have to touch my long-term portfolio. So I hate this idea of people just trying to show that like, it's just emergency fund and investing is two separate topics. I noticed that Meet Kevin's been pushing that narrative, and it's like this, how to be a millionaire, these millionaire perspectives, and dividends are tax inefficient, only buy growth shit. Emergency fund, oh, you don't need that in cash. You need that invested when you're young. It's like, no, not necessarily. It depends on your circumstance. What if you have a kids and a family, and then you're like, oh, I don't need an emergency fund. I can put all of that into stocks. And then March 2020 hits and you lose your job, but you have kids and a house and a wife, and like it ruined you. It's so dumb when I listen to some people's opinions. This is why I like Dave Ramsey, because he's really harsh about these topics. Because sometimes I think you can't make blanket statements about that shit without knowing somebody's circumstance, which is why it's not financial advice. You got to know where you sit in your own life and then make the proper risk adjustment associations, or fix your shit. Kyle, as someone who is transparent, have you ever been guilty for buying a stock and having the fear of holding it in the red for years and then selling? Yeah, to be honest, that's not something I've ever had issues with. To give you a good example, GEO Group. I advocated GEO Group for the longest. Guess who's advocating it now? I mean, Michael Burry. Michael Burry's all about them prison stocks. I was about them prison stocks in the early days. In fact, I'm on Netflix because of those prison stocks. I actually got a slot because I was talking about them in the early days of my YouTube career, and they gave me like $1,000 to use some clips of me talking about these prison stocks. And yeah, I was down in the red. It's actually the worst loss I've ever taken on a position. And to be honest, I feel like I've gotten better about taking losses because I have no guilt. I get emotionally, like, I don't know how to say it, man. It's probably like this serial killer instinct when it comes to stocks, because I can be so emotionally attached to a stock like MindMed and see the mission driven aspect of it. But at the same time, I can just sell the whole position like a day after it. Like Facebook and Google are great examples. I love those companies. They're some of the greatest balance sheet companies on the planet. If you like them and they fit in your portfolio, buy them. I had no problem selling them over the last 2 weeks. Like I don't know why. I don't know why I decided to sell them to buy other stuff instead. I really don't. It just what happened. All right. It's just where I'm at. So no, I don't really feel guilty. And I don't know why people do either. And it's just like, sometimes if trades aren't going your way, you're better off selling them, because there's too often than not. And like, I'm not going to try and throw people under the bus here, but because I do like some of these positions, these small caps like SoFi, like Hyliion, but like a lot of people rode those into 80 or 90% losses. And they're confident that over time, those companies could come back, and they absolutely could. There's nothing saying they wouldn't. For me personally, once I start, if I started losing that much, usually I'm gone, I'm out. Like Alibaba, like look at me with Alibaba. Like I wasn't going to hold it through the entire loss period, and then I bought it back. I made a little bit of money, and then it didn't go my way. Yeah, absolutely. I didn't feel good about the way it was going, and I'm like, I put too much money in this, so I immediately just pulled it out, and I made a profit on some of it. Now I'm holding the rest of it because I still like it into the long. But I don't know, man. It's something that you have to come to terms with on your own. If stocks go down and you feel you overpaid, sometimes it's just best to get out. There's always another trade out there, man. There's always another stock. There's hundreds of stocks that are going to be just as good. You just don't know if you're in a bad trade, right? So sometimes if it drops 20 or 30% and you feel uncomfortable about it, just take the loss. I mean, because it can always get worse. Never forget that, folks. Stocks can always go lower. That's what we're realizing right now, aren't we? We thought that we hit the bottom, but some of these stocks are still going lower. That could happen for the next year, 2 years, three. Nobody knows. Look at the dot-com bubble. You just don't know, right? So I don't know. It's kind of funny that way. Good news. I can add Canadian stocks to my UK tax savings account. Banks seem safe place with good dividends, and they are safe places, but that doesn't mean they're not going to go down either. So don't take them as like this end all be all investment position. This is diversification, folks. Like energy stocks. I mean, I'm not a proponent of energy stocks, but my God, my utilities are crushing it this year. Telecom. Who would have thought telecom would do so well this year? I mean, look at Bell, look at TELUS. I mean, who would have guessed banks would be, at the levels they were even over the last 5 years? I mean, banks did nothing for such a long period of time. Now they're just crushing it. SPACs, EVs, IPOs. I actually still like some of the SPAC stocks. I don't know if I'll play them, but I really like Polestar here. I'm interested in that. So ready to talk Shopify? Okay. Let's talk about Shopify. Shopify, man. Actually, so when I was kind of doing this little soul searching ordeal and I looked at the proponents that I had in my portfolio when it came to tech, I was really thinking that I was willing to sell Google and Facebook in favor of buying Shopify. The problem that I still have is because we're in this risk off environment, depending on how the next earnings period go, which I think the earnings for Shopify could be okay. Nobody really knows here. And even if they are good, that doesn't mean the stock's going to go up either. And what I'm hoping, and I know if you hold the position, you don't want this to happen, but I want it to happen with most of the stocks I hold, is I want them to go lower, especially with tech stocks that don't pay dividends, because I don't play options, right? So I'll play the trade a little bit in the near term. But Shopify for me, man, is one of those stocks that I want to hold because I have no Canadian tech exposure. And if you actually look at the proponents of my portfolio, you'll notice that I try and make sure I always have some foreign aspect in every industry. So like, for instance, when you're looking at like the banks, like I just added JP Morgan because I don't have any US bank exposure, and it's probably good to have global diversification. When it comes to my tech sector, I only have US tech, right? Like Apple, Microsoft, Tesla. I really want some Canadian companies in there for tech growth. And I love Shopify, and I think it would be a better proponent for my diversification than even Facebook and Google, let's say, even though I think owning all of them would be great. But like I said, I don't know. I flood around in my head trying to make this portfolio. It's like Buddy saying, oh, well, 25 positions. It's better to hold a few positions than a lot of positions. It's like, well, maybe depends on like, how many positions, what positions are you picking? I mean, like if you buy in an index fund, you're holding 500, and those 500 positions have outperformed almost everybody else. But then again, if you just bought Apple stock and maybe two other companies like Buffett did, and you just highly weighted Apple, you would severely outperform the S&P 500. So I mean, it's a tricky game. I mean, I don't think it matters how many stocks or how many little stocks you hold. I just try and hold enough that I can wrap my head around them. So I'm like, for the tech positions, I'm really looking at, perhaps buying Shopify. I really like it, man. So Shopify is one of the few companies that I think has the easiest ability to double their revenue. My problem with Facebook, I still love the company. I still think if you're into it, I mean, hold it forever. It's a great company. But my problem with Facebook is I think their core fundamental business is going to start to falter, not in a way that's just going to make them just die overnight by any metric. But the problem is when I bought Facebook, I thought I was buying this core under fundamental business, which in their last earnings call, if anybody even listened to it, Mark Zuckerberg said, I don't know if it was Mark Zuckerberg or one of the finance teams, they said that they were seeing less conversion on smaller ads. So I'm a smaller ad guy. I run small ads. I'm not running a multi-million-dollar ad budget. Most people in small town America promoting their businesses are selling small ads. They said that they're seeing less conversions on those ads. That scares the shit out of me. That means that their ad conversions suck. That means the average Joe in small town America aren't going to be using Facebook as consistently because it's not making them as much money. Where are they going to go? TikTok. TikTok's conversions are effing insane. I've never seen anything like TikTok's algorithm. Even YouTube Shorts can't compete with TikTok, right? So my fear with Facebook, for me personally, and I still love it, don't get me wrong, I still play VR like 4 days a week. I think they have this huge proponent in the virtual reality space. I think they're going to be a global leader in that industry. I just don't like the fact that, and I'm getting to Shopify. This relates to Shopify. Trust me, I'll explain in a second. But I feel like you had this core fundamental business that consistently grew, and you had this whole future upside potential as a cherry on top of the cake. Now I see this core fundamental business that will be great. It'll be a cash generation, largest margin balance sheet on the S&P top 10 for the next decade, no doubt. But we're not going to see the growth rates that we probably saw in the past. And whereas with Shopify, Shopify is a sticky business. It's SaaS, subscription as a service, or like software as a service, right? Or subscription as a service, SaaS, make up whatever acronym you want out of that. But nonetheless, when you get into that kind of a business, you're stuck paying a fee. And if you're using it to run your business, you're probably not going to just sell it because your ads aren't doing well, right? And then on top of that, they're pivoting into e-commerce. And the coolest thing about the e-commerce side of their business is they already have all of the clients to immediately accommodate for their products, right? I mean, they have literally all the large. I mean, it is a marvel of a business when Tim Cook mentions your business on their earnings call. It is a marvel and a half when Google and Facebook don't have a choice but have to pay attention to your business model, because that's where all the money from advertising dollars are coming from, are people running online stores. So I feel like Shopify probably is one of the most core, concrete, stickiest businesses when you're talking about the e-commerce play, when you're talking about especially these companies like the Ontario, MJ stores, when you're talking about Saputo Inc., which was a recent one. They made it so you can incorporate your Shopify store into TikTok. I mean, did they just own the conglomerates of business? So like all you do is you go up to them and say, hey, I can do next day delivery on your products. Instead of shipping them to your warehouse, send them to ours. We'll cut the price down in half. We'll do all your logistics. So Shopify, for me, I think they have this real quick way of doubling their business overnight. So I wish you could invest in TikTok, but you can't. Unfortunately, I don't think there's any way to invest into TikTok. If I could invest in TikTok 100%, I would be throwing money at it like there's no tomorrow. They do it better than YouTube does. Just from let me just give you a perspective from a creator. So for some reason, I have to go out when it comes to YouTube. I have to find my own sponsors. I have to put my email in. I have to go chase sponsors down, whatever, right? TikTok sends me the sponsors directly, and I can partner and choose which ones I like. They do such a fabulous job of everything. They just don't do monetization very well. I find YouTube is the easiest way to make ad revenue from like people just putting display advertisements. But when we're talking about making real money, I think TikTok's where it's at. I think anybody should get into TikTok because YouTube is pay to play. Facebook is pay to play. You can't get your content in front of anybody. I mean, look at my channel. I mean, I can post video after video, and yeah, it's nice to get 1,000 or 2,000 views. I'm very grateful. I don't even use TikTok that much, but I can post a TikTok and get 100,000 views. My girlfriend posts TikToks, and they're getting 6-figure views on the regular. I'm like, you know how insane that is to touch 100,000 people without having to pay for it? I mean, it's nuts, right? So yeah, I wish you could invest in TikTok. Will Amazon crush Shopify? No, I think they'll both be big players in the space. Well, actually, Shopify is the second largest e-commerce player next to Amazon, but they're in two different fields, right? I feel Shopify does a better version of e-commerce from a store perspective because all Amazon does is they host your product for you on their website, and you have to ship your stuff to their warehouse at a fee. Whereas with, I don't know, they're two very different businesses, but they're the two biggest players in the Western world anyways. Why is Saputo doing so bad, though? It's consumer defense. I don't get it. Yeah, so I never bought into Saputo. It was an early day play. I remember looking at it a lot. And I remember because my mom was like, oh, it's run by an Italian family. My mom used to make milk all the time, like sheep milk, highly valued products when it comes to like farming and cheese. So my mom understood the company fairly well. I used to love it back in the day. It did exceptionally well. I just never bought it. So yeah, that's probably one most people have never heard of. Saputo. What's Saputo? Cheese company, right? It's kind of like another one that I paid attention to, like Maple Leaf Foods. Maple Leaf Foods is another very interesting one. Thankfully, you bought an oil stock. Yeah, I bought it at a premium though, and I could go lower. I mean, I also bought Bell at a premium. I buy a lot of stocks at all-time highs, but sometimes they keep going up. You just don't know. And I wouldn't really, I don't know, would you call Enbridge an oil stock? I don't know. Maybe I'd call it a streaming pipeline stock over an oil stock. I don't know. Oil for me, man. See, the problem is like my brain thinks short term and long term at the same time. So like when I think about tobacco companies, I like them for the short term, but I hate them for the long term, especially things like MO. Same thing with oil. Like I get oil for the short term, but the long term, it doesn't make a whole host of sense. Especially when I talk to people about like, well, oil is going to be around forever. It's just a matter of I just don't see the business being resilient because of carbon tax, ESG shit. The government just hates oil. So it's booming now, but I promise you it won't be booming in the future. There's no way. And if you don't believe me, just go look at the Canadian government's plan on taxing oil. You think businesses are going to want to pay that shit? Do you want to pay that kind of tax? I mean, oil, the value of oil is going to double just from taxation in the next 10 years or the next 30 years, I think is what the Canadian government's plan is, which is the best Chinese e-commerce. They're all great, man. Baba, JD. But personally, I love JD. I love Baba. I should just buy an ETF of them. It might be time to dollar cost average into QQQ. I would still wait. I don't know, man. If God, QQQ is a hard one for me. I never bought it because I just don't like it. The values I can't wrap my heads around. Like, I think Google's expensive here. I think Nvidia is still expensive here. I think, Apple's expensive here. Microsoft is expensive here. I could see them honestly dropping 30 to 50% for whatever reason at any point in given time, and I'm prepared for that. But I just don't know anyone that's buying that saying it's a value today. I think if you're buying things like Tesla that I hold, like Apple that I hold, you should just be prepared that if they drop, that you're going to be holding them for the next 10, 20 years, 30 years, right? Because they're just expensive, man. They're just expensive. I'm really hoping because Apple didn't offer guidance that they drop in half. No, maybe not in half. Exaggerating here, but always exaggerating. But because they didn't offer guidance, I'm really hoping they miss earnings and they drop by like 30%, like all the big companies have done, because Apple's voted very well. That's why I've been scaling it down, right? Like I started scaling Apple down at the beginning of the year. And I want to buy some of that position back. I've left about 30% bleed room to buy it back. Because it's about 4% of the portfolio. I would like it to be at 5%. Like I want my largest positions to be around 5%. So J&J is 5%. Apple, Microsoft, I want to be 5%. Tesla, I left a lot of room as well. Like I hope Tesla crashes, because if it can really crash, and I don't mean like back to the 6 or 7s, I mean like back to the 3 or 400s, I'd be on it like crazy. But you just don't know. You never know. That's the hard part about investing. Good point. We'll research QQQ more. No, like I said, if you like QQQ at this price, start buying it. There's nothing wrong with it. I just don't know. They just don't ever buy it saying you're getting a good deal. Like you're not getting a good deal on QQQ, even at the price it trades at. And it could always trade at a premium. It's like McDonald's. Like I don't think Procter & Gamble trades at a discount, and I'm buying it here. I understand that I'm overpaying for it. If you think Apple is overvalued, why did you buy McDonald's? They have a similar PE. Yeah, well, so here's the thing, right? It's just like, what am I going to do? Sit in cash and pray to God these stocks tank? It's like, it reminds me of Charlie Munger talking about Costco. I think Costco is the most overvalued companies on the planet. But when you understand Costco's business model, it's like, how do you not own it? It's just like, you can't not own it, but like, it's so freaking overvalued. But like, how do you not own it? I mean, the way Charlie Munger explained it is how I feel about most of the stock market. Like I can find pockets of value, but just because you find pockets of value doesn't mean you're going to make money. Go ask Everything Money. I mean, Everything Money that guy hasn't made money in the stock market in like 5 years. And he's all about value stocks. Like value stocks is where you make the most money, Facebook, Alibaba. It's like, okay, well, Tesla's the most overvalued company on the planet. It's just like, well, you would have made 10,000 extra money on Tesla than you would have been Baba and Facebook. So it's just like, it doesn't always matter. It doesn't matter. Value doesn't always matter. So it's the same thing, Charlie Munger. Like, that's why I think it's funny that these core fundamental value investors are like, oh yeah, it's overvalued, but how do you not own it? I mean, like the way Charlie Munger described Costco was the funniest shit I've ever heard from a value investor. And look at Ray Dalio. I mean, Ray Dalio is a core fundamental investor, and he owns like all these crazy overvalued companies, Procter & Gamble, McDonald's. Like sometimes you just got to cough it up and pay the premium and understand that, like, if you're looking at it for cash flow reasons, and I've just always wanted to own McDonald's. I don't know. It's a tough decision. Yeah. Dumb luck. I honestly feel like most people's investing career is dumb luck. I feel like most of my investing career has been dumb luck, consistent dumb luck, because I'm jittery as hell. I bought Canopy Growth Corp before legalization. I made a fortune, but I sold it out in the 20s and it ran to 50. Same thing with Tesla. I sold it all the way up, and if I just held it, I'd have made way more. But again, I'm still better off than any investor that I know when it comes to like a percentage of gain points. So like I said, I don't think I'm the best investor. I think I could lose at any time. I'm always sketched out 9 ways to hell by the market. That's why I kind of move around here and there. But if it works, I mean, like, I don't know. I'm just going to keep doing it for your entertainment value. And if it blows up in my face, you guys get to watch it live. Maybe not live, but I'm very emotionally intolerable to this shit. This is what it's like being in the entertainment industry, folks. You suck it up and you get used to it. and you understand that you're not going to win them all, but damn it, we're going to ride this flame to the bitter end, just like every YouTuber that I believe in, PPC Ian. You know, I love these guys that have been OG to the markets forever because I've watched so many YouTubers come and go. And it's just like, yeah, you know, you kind of got to suck it up like Meet Kevin did. You know, it's not all going to be fun. Your opinion's going to change, and you know, you just got to deal with it. Does it work to your favor? Who knows? Maybe it does, maybe it doesn't. You might look like an idiot, but Jim Cramer's looked like an idiot for the last 10 years of his investing career. But damn it, he's still going strong. So you gotta believe, man. We're all playing the game. Pre-markets are a bloodbath. Bring it on, baby. Let's check it out before I get off of here. He's still a G. Like I love, you know, I feel sorry for Captain Ryan. Why do you feel sorry for Captain Ryan? He knows what he's doing just as much as the rest of us do. You know, he's pushing highly on. Everyone's got their plays, right? But I want to see this futures here. Is the market even open tomorrow? Let's take a look real quick. Stock futures. Because I thought it was a long weekend. Maybe in Canada, the markets, are they open? Part day down over 1%. The NASDAQ's down 1%. 6%. Dow's down 0.4, but that could change before market opens. Yes. So tomorrow should be fun, a holiday. We can watch the trading. 4% return in 5 years. GIC. No one's buying a GIC. You're buying a GIC. I have a GIC account set up, but then I realized that my interest savings account just went up higher than the GIC did. So I had the bank set the GIC up because the percentage, because it was going to be my emergency fund. And the bank was going to give me 1%. Ooh, 1%. But all of a sudden, because interest rates went up, my basic savings account is now offering 1.1%. So I was like, oh, I can get a higher return for my basic savings account. I don't have to put it in GIC. High rate savings 2.4 now. Yeah, maybe I'll have to go ask them about the GIC, because I'm guessing if the basic savings rate went up, so did the GIC account. But anyways, folks, I've been rambling here. We're all playing games. I hope you guys had some fun. And remember, keep hustling. Like I said, this is just entertainment value. Don't always do what I'm doing here. But like I said, I'm over 1,000 a month in dividends. Crushing it here, folks. I mean, that's a milestone and a half for me. And who knows? Maybe I sell those dividend stocks next week to buy back into Google and Facebook. Who knows? It's a game. We're all playing it. Thoughts on H&R REIT? That's a good one. Dream Industrial is also very good. My buddy's daughter is actually running the, just a side note here. My buddy's daughter went to school to be a corporate accountant, and she's actually working for Dream Industrial right now, they're like, I don't want to get into it. Maybe this is some insider information, but we're talking about their fundamentals. Very interesting stuff. But stay cool. I love Dream Industrial. I also love H&R REIT. They're all good companies, relatively speaking, if you're diversifying that REIT sector. I haven't bought Dream yet, but I look at it a lot. It's paying a 4% yield. It's pretty intriguing to say the least. But nonetheless, folks, stay cool, stay awesome. And as always, I look forward to catching you in the next one, folks. Peace.